You probably clicked on this video because you're tired of subpar market returns and you want to find that holy grail of investing. But the problem is, everything you found out there either don't work or they are simply too confusing. That's why in this video, I'll share with you the cycle that has governed our world, the cycle that has predicted the last 200 years, notably the 1920s depression, the 1970s crash, the 1990s boom, and the likes of 2000s and 2020s bull markets. This cycle has predicted everything. As a matter of fact, the economist who discovered this cycle was murdered by his government for unlocking the secret to the economy. With that, I'll reveal everything you need to know about this cycle. I'll then show you what we can expect now and going into the near future. Lastly, I'll uncover how you can take advantage and gain your edge. Before we start, if you guys would like all insights and tips about real estate, cycles, stocks, properties, cryptos, make sure you subscribe to my newsletter down in the description below. Alright, let's get into it. So the cycle that I'm talking about is known as the K-wave cycle, or the Kondratiev wave. Discovered by Nikolai Kondratiev, who was one of Russia's most outstanding economists of the 1920s. The K-wave is generally seen today as a commodity cycle wave. A rough 60-year cycle, the up wave consisting of 30 years of rising commodity and the down wave consisting of 30 years declining commodity prices. It also represents the technology wave due to the close link between technology and commodity. Now, unfortunately, Nikolai Kondratiev was executed by the Russian government due to his discovery and capitalistic support in a time where communism was around. However, his work still remained very relevant. Now, here's what he drew up before he passed, which eventually happened. As you can see here, Kondratiev predicted a peak in the 1920s, which was a perfect estimation. After the peak, commodity prices actually bottomed in the early 1930s during the Great Depression, just as Kondratiev said they would. In years after that, history actually showed us that prices rose again during the 1940s and into the 1950s, and this happened as the world recovered from the Second World War. And the 1950s was a decade of low commodity prices, as you can see here, trading at levels that have never been seen since. And that too is exactly what Kondratiev would have forecasted. A period of 25 to 30 years of low prices on the downswing of the next long wave. And this completed the third long wave. From the late 1950s, commodity prices began to rise again, in what Kondratiev would have called the upswing of the fourth long wave, right after the third wave, forecasting again another 20 to 25 years of rising prices. He would have expected commodity prices to peak in the mid to late 1970s, which they did again and again and again, falling commodity prices for the next 20 to 25 years, all the way into the mid 1990s. And after the commodity price lows in 2001, one could reasonably expect the next upswing in the commodity to begin, the fifth long wave. And this most certainly what happened. On average, commodity prices actually almost quadrupled between 2000 and 2011. And we remain very much right now on the upside of the current fifth wave, from 2011 until 2025, where gold prices and silver prices are now at an all-time high. They are all happening according to the K-wave model. So what is the underlying cause behind K-waves? Now let me dig into this. Now each long wave begins with an explosion of economic activity driven by the mass adoption of new technology. Now listen, the key word here is technology. And don't get me wrong, it isn't that humanity only invents new technology every 50 to 60 years. Indeed, we are inventing new things all the time. But what initiates a new long wave is different technologies being invented during the downtime and being applied on a large scale only at the beginning of the next long upswing. For example, the internet era, which transformed the way businesses work and the way people live, now are making waves for AI and crypto. And the wave before that, from 1955 to 2001, being electronic communication. So what now? Now we are currently in the fifth wave. We are currently, to be specific, at the end of the current 20 to 25 year fifth wave upside. Should the timing and history of the fifth long wave repeat like the other waves before, we could expect the peak of the wave around 2026 and 2027, and in a manner just like all other waves. Now those are the years that you should be familiar with because it will mark another end of another 18.6 year real estate cycle as well. But how do we know so sure? Well, just like every other long waves that have happened, the same signs have showed. For example, technological innovation that have led to the birth of new industries and models of productions like AI and crypto. We also have rising debts, as always, significantly affected by the lowering of interest rates, tensions between nations leading to possibility of conflicts such as Russia and Ukraine, US and China, and also China and Taiwan, etc., etc. Therefore, we know the downfall is inevitable. Following the commodity downfall and price peak, we would expect to see an overall downtrend in prices for the next 25 to 30 years. So the real question is, how can one take advantage of this? It's very simple. So during the uprun, it's very important to own some land value. Why? Because land has value in good locations where people want to live and work. As economies grow, the value of location takes a gain in progress of the economy. Secondly, act like a bank itself. Borrow as much as you can at the start of the cycle to buy a place in a good location, then have someone else cover the whole interest by renting it from you. You can also invest in stocks that benefits from rising land values. In prior cycles, this has typically been banks and housing stocks, such as house builders and companies that supply the industries, and real estate investment trusts or REITs. Lastly, look into investing in stocks of individual commodity companies or their own suppliers. In particular, mainly companies that own the land and the natural resources themselves, or the rights to mine or extract resources. You can also invest into ETFs or exchange traded funds that track commodity prices yourself. That's enough about the upside. How about the downside depression that we're so near to? One important thing to note, recessions during the down years of the K-waves tend to be a lot more severe. This was why the recessions of the early 1930s was a full-blown depression, because it was on the downswing of the long wave. Therefore, you need to protect yourself, deleverage and reduce all your debt position, try to get out of your investments and hop onto bond and cash in different safe currencies. This will enable you to have enough fun to start shopping at the low of the next upcoming cycle. Well, there you have it. Do let me know how you think about the K-waves and how you think it can help you, and if you think it actually works, in the comment section down below. If you want to see more further insights about the market of real estate, crypto or stocks and the cycle, make sure to subscribe because I will be revealing the rest of my findings very, very soon.